Are you ready for a wild ride, Bitcoin holders? Because brace yourselves. The banking industry in the USA is facing more collapses. Surprise! And it looks like it's only a matter of time before more banks crumble under the pressure. In fact, a few could go down this weekend. While the Federal Reserve is busy raising rates, yet again crushing more banks, Bitcoin is surprisingly standing strong and defying the odds right now. Crypto exchanges are fleeing the country as well in the USA in droves. And of course, we have a crazy idea of printing $1 trillion coin to try and fix America's debt woes. What are they thinking? Things are about to get even more chaotic. So hold on to your butts and your Bitcoin and get ready for the coming storm. Now let's talk about the Federal Reserve, the storm maker, if you will. The Federal Reserve just announced yet another rate hike. Surprise. The Fed fund rate is now 5.25%, higher than the 5% inflation. This latest rate hike has put many more regional banks at extreme risk of immediate collapse. There are about half a dozen banks that may not even survive the weekend. Let that craziness sink in for a second. PacWest is the next most likely domino to fall, and if it fails, then it will be the 5th biggest banking failure in US history, meaning that this crisis will have set a terrible new record of 4 of the 5 biggest banking collapses in US history. It's nuts. We are already beyond 2008 in terms of the total size of this crisis. The dollar value is much larger. More pressure than ever will be on the Fed to cut rates, or at the very least, not raise rates anymore at the next meeting in June. The failures of the next round of banks could be coming hard and fast, and it's already looking like plans are being worked on for mega banks like JP Morgan, Bank of America to buy up those coming collapses. The big banks gonna get even bigger. It's of course gonna make it all so much easier to roll out central bank digital currencies when they come. By the way, you either bank at the big banks or be your own bank and have your money in your wallet. Don't trust the little banks, your money's not safe. Trust the CBDCs. Also, remember, none of this is by accident. The Federal Reserve raised rates knowing full well that more banks would fail and that the big banks, who are already too big to fail, are going to get bigger and less failure, I guess. This has all been done on purpose. The Fed's policies have crushed the economy and crushed the banking sector in the USA, and it's criminal what they are doing, but they're doing it anyway. There are even new calls for the FDIC and the Treasury in the USA to guarantee all the deposits in the USA. All the deposits, man, yes, all of them. You see, right now, the FDIC only has enough money to cover about 1% of all the deposits, just 1%. It's insanity. And even then, that's only up to $250,000 per account per bank, creating both the potential for moral hazard, but also if money in banks is not guaranteed, then that also, of course, runs the risk that more bank runs are going to happen, meaning that, once again, dozens more banks could be up for collapse. And this comes at a time that the USA is only weeks away from once again hitting the ceiling on its bloated, monstrous debt, leading to calls once again for the creation of $1 trillion coin. Yes, you heard that right, $1 trillion freaking coin. They've talked about the idea before, but basically this $1 trillion coin is being touted as some kind of magical solution to the problem. You heard that right. Well, Bitcoin, of course, is criticized as having no value, being just made up out of thin air. Of course, this is not true at all. We've got to put in the work in order to get that Bitcoin right, but the central bankers are just laughing in our faces, man, as they're proposing $1 trillion coin. Money is becoming worthless and meaningless. Tell me honestly, do you really see any difference between these two pictures right here? Because the way things are going, there really isn't any difference. And according to a recent survey, 50% of Americans, they don't think that their money is safe in the bank. I'm surprised it's only 50%. But with things like $1 trillion coin being discussed, the fact is that, yeah, your money's not really safe in the bank or in the dollar either. To be honest, the US Treasury is also designing a program to buy back US debt, something they have not done since 2000. This is yet another backdoor bailout for the banking industry and the whole financial mess. Hard to see it as anything different, really. Look, the key thing to understand here is that the USA does not have enough money to insure every deposit at every bank in the USA. Where are they gonna get it from? Nor do they have the money to buy up all the US debt. Not even close. Nor do they have the money to bail out all the foreign-friendly banks holding things like US bonds and US mortgage-backed securities, which the Federal Reserve has already committed to doing, by the way. They are gonna need a lot more of those trillion-dollar coins before all of this is done. Now, before we talk about the big exchange exodus from the USA, and of course, the big Bitcoin news. If you're not signed up to the Wealth Mastery newsletter yet, then you need to do it. You are missing out. My team and I spend about 40 hours every single week creating this very easy to read newsletter packed full of alpha on altcoins, NFTs, DeFi, charts, airdrops, and more. You can read it all in like 10 minutes. And the best part is you can join our 65,000 weekly readers for free by using the link down below in the description. So check it out. Now let's talk about the crypto exchange exodus, which is well underway right now in the USA. Both Coinbase and Gemini have launched offshore derivatives exchanges. Now they're still keeping their spot exchanges onshore for the time being. But after growing tired of the US regulators, crypto exchanges are starting to say, screw it, we're just gonna pack up and move then. I think Coinbase could be eyeing up actually moving into the UK, which would be big news if they actually did. This is such a big screw up on the USA's part, this lack of regulation. And while Coinbase and Gemini haven't shut up shop in the USA just yet, they're certainly hedging their bets, as you can see right now. They're preparing for the day that may come when it just becomes so unbelievably hard to do business in the USA, they just have to go somewhere else. Coinbase, of course, landed a license in Bermuda at the end of last month, and now just a few weeks later has launched its new derivatives exchange. Coinbase International Exchange is supporting non-US, unfortunately just institutional traders at the moment. Maybe they'll open up to retail at some point. But anyway, institutions will have access to futures trading for Bitcoin and for Ethereum. And then there's, of course, Gemini. They just launched Gemini Foundation. Now, this is a non-US trading platform for Bitcoin futures governed by Singapore law. It's gone live in 29 different countries, including Singapore, Hong Kong, India, Argentina, the Bahamas, El Salvador, and a whole pile of others. The platform, though, is not yet available to users in the UK or the EU, as well as, of course, the USA. The USA is going to look back on all this stuff in a few years and come to realize how dumb the regulators were at the time, how big the mistake was, losing all these major US companies that were the forefront of the crypto industry, and they're being pushed out of the USA. Once they're gone, they might not come back. One possible spark of hope, though, is that US courts have actually demanded the SEC has only 10 days to issue a formal response as to why they have failed to respond to Coinbase's petition that was asking for clarity on regulations. So maybe we'll see something actually play out in the courts here. Now let's talk about some crazy Bitcoin stats. So we had 2 all-time highs this week for Bitcoin. Yeah, obviously, that was not the price, but as we mentioned previously, Bitcoin did hit an all-time high transaction count at 682,000 transactions earlier this week, which is awesome and insane at the same time. Happened during a bear market, but that's not the only all-time high. Bitcoin hash rate also hit a new all-time high. You know, just bear market things, right? That's crazy, man. The Bitcoin network is stronger and healthier than ever. But why such a big spike in the Bitcoin hash rate? Well, it's pretty damn simple. Miners are coming back into the network to chase after the high spike in on-chain fees. You see, 54% of those all-time high transactions were actually Bitcoin-based NFTs called ordinals. The NFT seen on Bitcoin exploding right now, which is, to be honest, kind of cool. I like seeing that. I like seeing Bitcoin finally getting on the NFT train. Well, Bitcoin had NFTs way back in the day, but they never really took off, right? But they're taking off now. But Bitcoin-based tokens are not stopping at pictures. Nope, we're about to see Bitcoin smart contracts. Again, we've had some kind of form of that on Bitcoin for a while, but this is taking it to the next level. Bitcoin tokens really coming out. Finally, right? This is going to actually create a lot of economic activity on Bitcoin, and I'm here for that. I'm excited about that. Okay, that's it. Subscribe now. I'll see you next time.